So let's say you have a friend. Let's give her the name Adaise. She runs a ready-to-wear business, and in the course of your conversation with her, she told you that she makes a revenue of let's say 1 million naira, but she's struggling to pay her rent, struggling to pay her car salary. In fact, a lot of times she might even have to borrow the money to pay this, and you're wondering why is that? I know this happens to a lot of people. Maybe that's even your own story. You've had great sales, your business has been booming, but you cannot account for your money. But what she didn't know, and what a lot of us do not know, is that revenue is not the same as profit. And profit is not even the same as the money you have in hand. That is, profit is not the same as your liquid cash. If you are new here, welcome. I'm the finance savvy girl, and I'm here to put you on some finance tips that will definitely help you and help your business. So let's go. I'm a chartered accountant. I've worked across multiple industries and I've seen different books of accounts. And I can tell you for a fact that this very confusion is what I see a lot of Nigerian business owners make, regardless of the size of their business. So whether you are selling on online platform like Instagram, like TikTok, or you have a walk-in salon store, or you have a walk-in store, or you even have a full-fledged business, or you are trying to understand businesses for yourself, this video is for you. Make sure you subscribe and turn on your notification button so you don't miss the remaining part of this series. So let's go. So you're wondering what exactly is revenue? Revenue is the total amount of money that you made in the course of your business over a period of time. So now let's go back to our initial character. We call her Adaise. She has a ready-to-wear brand where she sells different kinds of styles of Ankara and ready-to-wear outfits. Now, she made a revenue of 2 million naira in a particular month. Let's call the month November. So that 2 million naira, she made it across the first day of the month till the last day of the month. This money came from online customers, came from people that saw a billboard. So she has a physical store, right? Or whatever type of store that she has. The online customers, the walk-in customers, the ones that were referred from the previous customers, and all types of persons that had reached out to her. This was the total amount of money she made, which is 2 million naira. So let's now assume she sold each of these outfits at 20,000 naira. That is her revenue. The total amount of money that she made in the course of that period is called a revenue. So revenue is the total amount of money when you have not deducted any salaries, you've not deducted rent, you've not deducted logistics and admin expenses. That total amount of money, which is the cost per unit of the item. In this case, which is the ready-to-wear outfit, 40 persons paid 50,000 naira. That's a total of 2 million naira without deducting any expenses. That is a revenue. Revenue is what you have initially earned without deducting any expense. Because a lot of people see revenue and just assume that, oh, I have money, I'm very rich. It brings excitement, but it tells us very little about the business. But revenue tells you very little things. It does not mean that is what you're going to have in cash, because at the end of the day, you have to pay some costs. So I think that has been able to explain what revenue is, which brings us to our second point. Profit is what is left after you have subtracted all your costs. So the cost of logistics, the cost of the fabric and the material that she bought, the cost of paying her tailors, that is the people that are sewing the dresses. Now, in the case of Adaise, the cost of our business will probably be the logistics, the cost of purchasing fabric and material, the cost of paying our tailors, the ones that makes the clothes, will be the cost of running Instagram ads, the cost of paying for our rent. All of this amounts together to our costs. So let's say she bought fabric and material for 400,000 naira. She paid her tailor 150K. She paid for logistics and delivery 50,000 naira. She ran Instagram ads 80,000 naira. She paid rent for 70,000 naira. Everything all together makes up 750,000 naira in cost. Now, the 1 million naira that she had initially made minus the 750K, we're going to be having 250,000 naira left. That's going to be our profits. Now, this is where it gets more interesting because there are actually two types of profits. So we have the gross profit and we also have the net profit. Gross profit is revenue minus the direct cost of what you sell. Think of direct cost like the materials, the production, the tailor's work. These are the things that help you to determine if your pricing actually makes sense. While net profit is revenue minus everything. That is all your costs, all your overheads, ad, rent, salaries, everything all together. Everything accumulates all together. You add everything, then you subtract it from your revenue. And this is the real picture of whether your business is actually making profit or not. If somebody asks you how is business and you tell them you're making 2 million naira or you're making 1 million naira, you need to be sure that you're not mixing your net profit up with your revenue. Now, this is the one that confuses even people who understand revenue and profits, which is that you can actually be profitable on paper but still be very broke and don't have money. And no, I'm not even kidding. That's the cash flow. Cash flow is about timing, specifically when money enters or leaves your account. It tracks the details of when money enters or even leaves your account. So let me give you an example. Let's say you run a let's say you run a small catering business. You have a wedding, you have delivered the food, the event is a success, but the client says, we'll pay you next month too. Meanwhile, you've already paid for the ingredients, you've paid for your cook, you've paid for gas, the packaging, the plates, and everything. That money has already left your account. On paper, you have already made profit, but in the real sense of it, you don't get money. That is actually a cash flow problem, because I don't even see why somebody would actually go ahead to use their own money to render service for another person. That's actually, I mean, maybe you're generous. And that's why a business that looks very successful on paper suddenly cannot pay salary. Minus the economic effect or the advent of AI now, where people are just cutting down on staff strength. So your revenue can be an actual record, your profit is recorded, but cash flow is what shows the exact in and out operations of the business. There are three things that drive cash flow: the operating activities, the financing activities, and even the investing activities. The operating activities, everyday money that is coming in and out from your actual business, while the investing is if you buy equipment or you buy assets or you use your profit to invest. While your financing activities is the loan, the repayment, investor money, and everything that you pay back. So for most small business owners and young professionals, what you really need to watch is your operating cash flow, because that's the pulse of your everyday business. In Nigeria, we're not exactly raised with financial literacy class, except you probably studied accounting or finance. We learn that working hard is equals to money. When we see big numbers, we just assume that, oh, this person is rich. When you're running the business, especially when it's a one man business, you wear so many hats that tracks all three. You track your revenue, you track your profits, you even track your cash flow. And it feels like this is too much. So we pick the one that sounds the best, which is revenue. And you just go with that and just assume that, oh, that's it. But now you know better. When you know better, you should do better. And this is what I want you to remember. Revenue is the invoice, that's the total amount of money that you receive. While your profit is what is left after you have deducted your expenses. Then your cash flow is what is exactly in your account at the moment. That's what shows the in and out of your business operations. If I able to think of it this way, you can earn a lot, which is your revenue, make something, which is profit, and you have it, which is your cash flow. And this is what I want you to do today. Take a last account statement, track your revenue, in money that came to your account from your business operations, the total cost, everything you have spent to run the business in the course of that period, and what actually stays in your account, what you could physically, what is like your liquid cash. Just writing these numbers down would show you the gap that is in your business. Are you actually making profit? So you'll be able to track the exact gap and you work on that very gap. And if you're an employee, this same logic is applicable to you as well. Your salary is revenue. After your rent, your food, your feeding, transport, data, that's your cost. All of these are your costs. So what is going to be left at the end of that period is your profits. And if your account is empty even before month end, that's a cash flow problem. So you can drop a comment today and let me know which of this has been confusing. Is it the revenue, profit, or cash? Just type it and let me know in the comment section. And if this video has helped you to see something differently, please share it with one person in your life. And if you have not subscribed yet, what are you waiting for? You've really learned a lot today. So, and I'll see you in the next one. And remember to always stay financially savvy. Bye.